Hello from the Dugascopy TV studio in Geneva. We are back with our technical analysis this week with Jean-Francois Owczarczak from the Management Joint Trust. Welcome to the studio, Jean-Francois.
Hi, Daniel.
And it's exactly now the week one after the surprising decision of the Swiss National Bank to make a stop to the fixed exchange rate. Can you give a market overview? So the markets reacted, of course, very wild. What is FinGraphs, your system, saying? Where are we heading to?
Okay, well, I mean, we're back with our mosaic here. We've added a few things. So we have still the euro-dollar, the cable. We've added back Euro-Swiss because it is back in the active mode. Gold, dollar-Swiss, which also saw an impact, dollar-yen, the SMI, which we just added again, which has seen quite a drop-off, as well as the S&P futures. We'll probably start with the Euro-Swiss just to see the extent of the move, look at it on a trader's view, maybe 60 minutes, and just look at the announcement. As you see, we were very close to 120 over the last few days, and suddenly we had this big negative candle with a very large exaggeration, which brought us in the first few seconds down to 0.85. It has since stabilized around parity, and so now we could just move out of the candles and have a look at the chart. And so, as you see here, the 60 minutes, obviously after the big move, is still a negative. It has reached what we. So this is a trader's view: a 60 minutes, a 15 minutes, and a 4-minute chart. We can see that as for the volatility we calculate, our impulsive 2 down have been done. So over the very short term, it seems that it has found a certain level. We could see that our oscillator is very much oversold. I just want to caveat all this because following such an announcement, we could take our indications as an indication, but it's still very early stages to be able to assess if parity is the right price or if it could actually go lower. Now, if we look at it on the 15 minutes, this has been reacting up over the following 2 days. And basically, it would still be only in a correction up if it doesn't make it above 105. So basically, the 105 and above would probably mean that we could see a sustainable move to recuperate some of the losses. But as long as we stay below that, it is essentially still in the downtrend that we can see here on the 60 minutes. And the 4 minutes has seen it rally up this morning. It was interesting to see that every day it rallies up and close to the evening with the uncertainty that accompanies it. We see it going back under parity. So I think it will still need a few days here to actually stabilize. And I wouldn't make too wild projections for the time being.
Mm-hmm. An important speech by the European Central Bank is coming up at the middle of the week. Can we also look to the euro-dollar?
Sure. Let's look at the mosaic on the euro-dollar here. And as you can see, well, we had our targets. This is the investor's view, a combination of a weekly, a daily, and an hourly chart. We had our targets down to 110, 19. Well, have had them for the last few months. They sounded aggressive at the time when we first expressed them. We're getting quite close to them. As I mentioned over the last sessions, the volatility is picking up, at least the one we measure with our delta, and so these targets are being revised down. So now the targets are just below 108 over the next few quarters. We can't confirm that the move is coming to an end yet, as the risk oscillator is still moving lower and it's not yet in the oversold. So we think there's more to go over the next few quarters, and that could lead us now towards 108 on this weekly of the investor's view. On the daily, we've very much extended now. You could see the risk index as well in the oversold. Our envelopes are touching each other. We made it to the impulsive 2 target zone, which is usually adapted for very extended moves. So so we made it right down to the lower end of it. So in this respect, the move could be pretty much exhausted on the euro over the next few months. Now, the ECB decision is going to be very important. People are going to focus on how much is announced. Is it going to be a closed program or an open-end program? And to which extent government bonds are going to be able to be purchased well, I guess they will be able to be purchased, but is it going to be a mix of corporate and government bonds, and what kind of conditions are going to be applied to it? So it's going to be an interesting meeting. I think a lot of people are going into it without really knowing what's going to happen, so a lot of uncertainty there. But from a price perspective, it seems like that on a daily basis, we're pretty much exhausted at the moment. On the hourly, and that probably leaves a bit of room for a negative surprise. We also in impulsive 2 targets. Very oversold too, but our impulsive 2 targets on an hourly basis over the next week or so could justify prices still plunging down to 113. So still negative, still no sign of reversal. The long term is still pretty bad. The medium term seems like it's gone a long way already. We could still have a negative surprise on the short term, but in essence, again, we're probably not too far here from some kind of a reaction, but we don't have any confirmation yet for it.
Does the gold price actually benefit from this uncertainty?
Well, the gold price always benefits from uncertainty. As we mentioned last week, we thought we could make it up to the 1250 mark. We actually made it higher. We went through what was actually quite, so here is an investor's view again. The weekly is still negative, could point lower, but that said, we had made it into the first or to the higher boundary of our impulsive targets. Here we see that the risk index is quite oversold. There's quite a few stress points on the envelopes. So it could be that we are in an intermediate correction up at the moment. We cannot call it a reversal yet because the weekly is still negative. But this correction up is underway. That doesn't exclude that later on this year we could move down again. But we will probably focus over the next few weeks on the daily. So the daily has broken out above our corrective target. It is now in an impulsive move. Targets point to 1330 to 1386. So that's quite a nice move still to come if it materializes. We can see that it was well oversold on the risk index and that our envelopes have been touching each other already twice, and they have been turning up, so hence the bull here. Now, I do remind you that we had a very important point here around 1250. It actually served as a resistance here during October, as well as support during early June. That means that once things settle down a bit, it will be important to hold this 1250 to justify the move till a move towards 1350 over the next few months. So it does seem like we've initiated a breakout. We'd love to see a bit more confirmation over the next few weeks as things settle down. The hourly has moved up quite quickly. It has reached its impulsive up targets, which could justify us going still to 1290. But it also means that we should see a bit of exhaustion here, maybe a bit of a consolidation over the next week or so. That said, we could also initiate an impulsive 2 target, which would accelerate the move. But we were positive last week here. We think we have fulfilled the targets for now. So measured optimism here on gold at the moment. Well, just perhaps a quick look on dollar Swiss too, because it has seen quite a big impact. We do trend analysis, so our longer term frequencies will gradually adapt, but what we can see, we don't have any more targets here, which means that we are in a neutral situation. On the downside, on the hourly, we pretty much achieved the targets too, around 88 and 83. There's still more time, so there's going to be more work here. And have we reached the levels that we expect? It's hard to say, but we could say that we're already overbought here on the risk index, which is a first indication of some support. On the longer term, what we could see is that the levels where we actually found supports are the ones where we had support here in 2014. We also seen a support here around 2011, also with this small notch here around 2011 on the way up, and also with this move here. So they would serve as a traditional support. We just stopped pretty much on them. So they should be able to at least provide some stickiness of price around these levels. So at the moment, we do believe that we've probably reached what we had to reach down on dollar Swiss. Now back to the equity markets. Well, interestingly enough, the markets adjusted very, very rapidly to the situation. And so and it's interesting when you look at these at the SMI, for example, in US dollars, you could see the spike and then a very quick adjustment of prices. Now they didn't adjust the whole price either, so that means that the equity markets didn't drop the 15% that the currency did. But at the moment, we would probably have a similar analysis than on a dollar Swiss. Actually, the charts are quite similar. There's a bit more work to do, a bit more time, but we're slowly getting into the oversold zone already. So we've probably priced in what has happened here. So in this respect, we don't think a very well. It's a one-time hit, but we don't have a very dynamic, a negative dynamic here at the moment.
Jean-Francois, thank you very much for your analysis this week.
Thank you, Daniel.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day.